Good afternoon. This is Tom Alexander. It is Saturday, August 21st. It's 1:25 p.m. Eastern Time here in lovely Charleston, South Carolina. And I thought we'd cover a few things and I'll expound on some things from the report. The chart you see on my screen is the profile view of the S&P SPX, and I've split it out into its individual auctions. Here I'm going to remove all splits and I'll start over. So the thing about an auction, the auction market process of development is that it is fractal. It's truly fractal, and it's very easily recognizable, the fractals of it. There's no 17 different ways you can come up with it's either this, 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 or that. It's fractal. And right now, what we have is a market in this time frame. This is an intermediate to long-term view. We have a market that bottomed in March of 2020 and has basically gone straight up on the intermediate term time frame. Now, this has been an extraordinary rate of change. Market can go a lot higher, but one thing that I can say with utmost confidence is that it's not going to go higher at the same rate of change that we have seen since the March low. Now, what are the implications of that? Well, the implications of that is that we're more likely, increasingly likely, to see more two-sided trade, something like this. You know, we've had one little minor multi-month blip in the force to the upside. I think more of this is coming at a minimum. And what that is likely to mean is that we have overlapping price action from month to month. Now, I don't know how tradable that is, depending on what you trade and how you trade, but it's important to know that. It's important to understand the market condition from the top down, regardless of the time frame you're trading. Now, if we go down in time frame, go to a weekly view, you can see we have this undeniable, consistent, and objective way of measuring the trend. And the trend is up. Each high volume node, as denoted by the magenta line here, is higher than the previous quarters. Okay, this is basically a quarterly profile view. Now let's go down in time frame further to the daily, and here's the daily view. Now, the more granular you go, you can see there's some overlap, and that's again, this gets back to the auction process. There's going to be trade facilitation in some time frame. And if you're not seeing it in the longer term time frames, you will see it in the shorter term time frames, again, because it's a fractal process. So this is, if you just look at the profile view, this is where we are. And it doesn't really give you a whole lot of information. Now, the information you can take away from this is that we're starting to develop inside the distribution range, or what is the distribution range so far, for the month of August. So our extremes for the August auction here, and then here to the downside. Now, to get an idea about how this is developing, we have to look at its individual components. In other words, the individual days that comprise this particular view. Then we get a very, very different view, or actually not a different view, but a more illuminating view. It's very, very clear now from this view that the upper extreme of this, if I can get this, do it the easy way. The upper extreme of this and the lower extreme of this, we went straight up and we've gone straight down. So this sets the upper extreme of the range, this sets the lower extreme of the range. Now, because of some other things that I'm going to talk about as we go further into this, it's pretty simple at this point in my mind. You do not want to see, if it's not different this time, if this was a low of importance, then we should not take out Friday's session low. If we close below Friday's session lows in all four of the indices, it's immediately bearish and potentially very bearish. What has happened in every single instance when we have had events like we had last Thursday, where we had a contraction in breadth, and I'm going to talk about breadth separately in a minute, but what we've had in every single instance since the March 2020 low is an immediate bungee jump higher. And what that means is that especially off the initial thrust off the low, the market's pretty much relentlessly higher. In the previous day's extremes, in this case to the downside, are not taken out. So if all four of the indices now reverse early next week and take out Friday's session lows, that's something that's very different that has not occurred. Certainly, last Thursday's lows are critical. And this is true in all of the indices. Now, I'm going to skip ahead to the Russell, and I want to look at the Russell cash for consistency. Okay, so this is the view. Let me check the report here. Now, I combined basically in the report you have. I combined all this into the structure, the one structure that it is. Actually, it also includes the August auction, but I left the August auction out because it really, the key reference areas for the bigger structure are also the key reference areas for the August structure. So if we split August out into its individual sessions, you can see now. So this is Friday's session low, which is not too much above Thursday's low. If we were to take this out now, we could be heading into this area with some sort of conviction. This area is just absolutely as critical as it gets down in here. If we do trade down in here next week, I will be sending out another report. Okay, let's take a look at breadth. And here we go. Now, you can go back and listen to recent reports or read recent reports. And my usual caveat applies here. Breadth is very, very helpful to the downside. It's not as helpful to the upside. But now we're bouncing off of this level. We had a couple of days where intraday we were flirting with negative 2,000, but we couldn't close at or below negative 2,000, which is a real important event. And it is the minimum level of capitulation. We've seen nothing resembling capitulation last week. So are we off to the races again? Well, if we are again, we should not take out Friday session low. If all four of the indices close below Friday session low, it's a real heads up. So what should happen now, if things are not different this time, is that we should see higher highs in the ES and probably the NQ at a minimum, and maybe the Dow. I don't know. We're not going to see new highs in the Russell, at least anytime soon. Now, we certainly want to monitor the Russell for strength, because if we start seeing strength in the Russell, what it means is breadth is going to be picking up as well. And that could be a very important event. But we can go to new highs now, maybe even, up into 4,500, 4,600. And we'll still very, very likely have the 5-day moving average and the 10-day moving average can set even more and greater divergences than we've been seeing now for months and months and months. Breadth closed on Friday at the highest level it's closed since almost a month, since July 20th, 21st. So what can happen now, what would be typical to happen now, or what shouldn't happen now, is that you see breadth take out the lows we saw last week. Intraday, even intraday. And what you might see is a pattern like this where, you know, the market goes higher and Brett just does this number that it can do. And you have higher highs on less and less Brett. Now, if we do go to higher highs, it is going to be so important to monitor the divergences between price and Brett. And I typically do not overemphasize the divergences between price and Brett, but because of the position with the moving averages of advancing issue, the 10-day moving average and 5-day moving average, and there's such, you know, the increasing divergences there, I'm going to be particularly sensitive to the divergences here and what happens. Now, price action rules. In other words, if we go up here and we're diverging here, that's not a carte blanche. Okay, let's sell the farm and sell and go triple short everything we own. It's not that, but it's a heads up. And, you know, we all have to be dependent on our strategies and tactics to keep us out of trouble and to put us in situations where we have opportunity to benefit when we think we have opportunity. But you don't fight the market. So if we go up here and we have divergences, certain things will have to happen to trigger me into a trade and hopefully trigger you into a trade. That hopefully that goes without saying. But next week, as usual, is setting up a fascinating week. You can do me a favor if you found value in this, if you will subscribe to the YouTube channel, and if you will like the video. You guys have a wonderful weekend, and let's all have a good week next week.